Earnings are out from Home Depot. Interested to see these same-store sales. That's not too bad. U.S. same-store sales up 5.5%. Home improvement retail reported profit of $3.92 a share. The estimate was $3.40. Revenue $36.8 billion. Estimate was $35 billion. Comp store sales were also better than expected. So not bad. Joining us with immediate reaction, Brian Nagel, analyst at Oppenheimer. That's what everyone was talking about. The slowest growth was a possibility. The slowest growth that we've seen since, I don't know, it was a pandemic play, Brian, but managed to do okay, or at least better than the lowered expectations for same-store sales growth.
Well, look, I think the bottom line. Good morning, Joe. I mean, this is another very, very strong report from Home Depot. I mean, when you consider the numbers they're putting up on top of really difficult comparisons, so like you said, that the key figures here. Comp store sales 6.1%, domestic comps 5.5%. Those were above expectations, but importantly, those come on top of really difficult comparisons. So, what we're seeing here in the press release from Home Depot is rather short this morning. But I mean, what we're seeing is that even as the pandemic in the United States is fading, thankfully, Home Depot's continued to perform very, very well on the heels of underlying strong demand for home improvement. And I think this is a big positive. Now, a lot of investor expectations, I've been talking to our clients a lot into this report. Investor expectations were high into this report, so maybe we won't see much of a pop in shares today. But I mean, this is a very, very solid report from Home Depot.
Classic. Okay, so it's a big stay-at-home stock. People are going to improve their homes during the pandemic. Now, rising home prices are giving people the confidence to reinvest in their homes, but it was put off, some of that home improvement. They were put on hold during the health crisis. So now, I mean, this is a reopening and a closing stock. That's classic. But 6.1 is way above. So, I mean, what's wrong with analysts? They were at 1.4%. Why were they so negative on the estimate for comp store sales, considering it's up 6.1%?
Well, look, I mean, I was there right there. I mean, I've been assuming, and I've been assuming incorrectly, that comp store sales at Home Depot would weaken, through now and then further. So just on the heels of these more difficult comparisons, and again, the company's proving us wrong. They're putting up some great comps on really difficult comparisons. Now, I remain concerned. Okay, so if you look at the comparisons over the next few quarters, they get even more challenging, particularly into early 22. I still think that could be a headwind for Home Depot here. It could be a headwind, particularly as we get further and further away from the pandemic. So I think right now, there is some pent-up demand they're taking advantage of, so to say. Like you're alluding to, people could not get jobs done in their homes because basically the workers weren't there. People, you couldn't get workers into your homes. So, but nonetheless, this is a very strong report from Home Depot.
Hey, Brian, the earnings per share beat is a good indicator, too. That tells you that they're not getting killed on the margins yet. But I do have a question about how much of the same-store sales is from inflation, and this comes through. They said customer transactions were actually down by 5.5%, but then they said sales per square foot up by 6.2%. So I guess the question is, are customers paying for more expensive things, meaning trading up and buying pricier brands, or are they just paying up because inflation is there? And the same-store sales expectations from the National Retail Federation are going to be very strong, 8.5% or something. But we talked to the head of the NRF, and he said half of that is expected to come from just inflation.
Yeah, Becky, that's a great point. Okay, so just in those numbers you laid out, I mean, what that tells me is it's really a combination of factors. One, to a certain extent, people may be buying more expensive products, maybe undertaking bigger projects. But there's also clearly, consumers are, so to say, eating these higher prices, and that's helping sales growth. Now, the benefit of the home improvement channel of Home Depot and Lowe's as well is that these companies can very effectively pass along higher costs to their consumers. They understand pricing dynamics really, really well. They understand project dynamics really well. And typically, and I think we're seeing this in some of these supplier reports, as you have these inflationary pressures making their way through the system, the suppliers are getting hit much harder than these retailers because the retailers are very good at managing this. But that's a great point. I mean, inflation is actually benefiting Home Depot at this moment.